Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from FX.cu portal. Here we go. Today is December 8 and we're starting from Euro-Dollar pair with Jakub Novak. Weak reports on changes in Germany industrial production and a decrease in the annual GDP of the Eurozone were ignored by traders yesterday, as positioning began on the market ahead of today's important labor market statistics in the United States. But we'll discuss this more in the day's second half. For now, let's review the report on the German Consumer Price Index and listen to what will be said at the meeting of the finance ministers of EU countries. Weak data from Germany may bring the pressure back to the euro in the first half of the day. However, upward prospects will remain until the release of US reports. For long positions, buy euro when the quote reached 1.0793 and take profit at the price of 1.0825. At 1.0825, we recommend exiting the market and selling the euro in the opposite direction, expecting a movement of 30-35 points from the entry point. Counting on the rise of the euro today in the first half of the day will be possible after good figures from Germany. Before buying, ensure that the MACD indicator is above the zero, or just starting to rise from it. You can also buy euro with a 2 consecutive price test at 1.0770, when the MACD indicator is in the oversold area. This would limit the downward potential of the pair and lead to a reverse market, expecting to grow to opposite levels, with 1.0793 as a main target and 1.0825 as the second target. For short positions, sell euro when the quote reached 1.0770. The target will be the level of 1.0735, where we recommend exiting the market and buying the euro immediately in the opposite direction, expecting a movement of 20-25 points in the opposite direction from the entry point. Pressure on the pair will return in case of weak data from the Eurozone and a lack of activity at the daily maximum. Before selling, ensure that the MACD indicator is below the zero and just only starting to move down from it. Selling the euro today is also possible in case of 2 consecutive price tests at 1.0793, when the MACD indicator is in the overbought zone. This will limit the upward potential of the pair and lead to a reverse market, expecting a decline to the opposite levels of 1.0770 and 1.0735. The next stage of our review is the next major. It's time for GBPUSD. Petar Ikimovich describes. GBPUSD has been trading downside this morning, and we found rejection of the key resistance cluster in the background at 1.2610. Petar sees potential for the further drop due to the strong rejection of the resistance cluster in the background and negative reversals on the RSI oscillator. Petar sees potential for the further drop towards lower references. Downside objectives are set at the price of 1.2528 and 1.2455. RSI oscillator showing bearish reversal, which is a good sign for the further downside movement. Key resistance is set at the price of 1.2610. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 2030. Within the uptrend channel formed since October 3, above the 21 SMA, and above the 200 EMA. According to the daily chart, gold reached the top of the uptrend channel around 2144 and quickly fell towards the bottom of the channel. Technically, gold can continue to rise in the coming days only if it consolidates above 2017. After the sharp fall in the last few days, the outlook could be bullish for gold, and a technical rebound is expected. The instrument is likely to reach 2062, around 58 Muri, or it could reach the 61.8% Fibonacci retracement around 2092. In case gold breaks sharply out of the uptrend channel, consolidates below 2017, and below the psychological level of 2000 USD, we could expect a strong bearish acceleration, and the price could reach the 200 EMA located at 1941. The market sentiment shows report that there are 60.75% of traders who are buying gold. According to our contrarian strategy, we expect gold to continue its fall provided that this percentage continues to increase. Yesterday, there was a 3.94% increase in traders who bought gold, which means that gold could remain under downward pressure and the price could reach the psychological level of 2000 USD. In the coming hours during the American session, the US non-farm payrolls data will be released. The US private sector is expected to have added 184,000 jobs in November. If this data exceeds the analysts' consensus, we could expect a sharp drop in gold that could reach 2017. And even the 200 USD area. On the other hand, if the data is weak for the US and comes out below the analyst forecast, gold is expected to accelerate its upward movement and could reach 2040 and 2062. Our trading plan for the next hours is to buy gold above 2017. In case of a technical bounce, it will be seen as a signal to buy. A break below this zone and below the uptrend channel could change our strategy and will be the time to sell only if the price falls below 2015. That's all for today. See you online soon and good luck.